When I was in school, I was taught the basics of personal finance, but what I wasn't taught was how do you actually build wealth. Now, luckily, I was able to read a ton of books. I was able to also receive mentorship from very successful millionaire type entrepreneurs. And through all that, I was able to finally become a multimillionaire and experience what it means to become wealthy. And in that journey, I was able to identify there are 7 types of accounts that most wealthy people have. And today I want to share what those 7 wealthy accounts are. So if you're ready, let's go. What's going on, y'all? Welcome back to the channel. I'm your grateful host, Jeff Rose. This is the Wealth Hacker channel. We're dedicated to teaching you new ways and faster ways to build wealth that was not taught to you in schools or by your parents. And today we're talking about what are the 7 accounts that you need to build wealth, to grow wealth. Now, the first thing that I definitely want to stress here is that these are 7 accounts that you do not need today. Like, if you don't have these 7 accounts today, that you are a failure, that you'll never become wealthy, that you'll never get rich.
Aww, I'm a failure.
When I first started my investing wealth building journey, I didn't have these 7 accounts. Like, it took time to build these accounts, to open these accounts, where I finally had the investments, finally had the capital to do so. So do not stress and think that, like, oh, I'm not there yet, there's no point in even starting. Like, don't start with that negative mindset. I want you just to be comforted knowing that you got to start somewhere. All right, so let's go ahead and dive into the wealth board to find out what these 7 accounts are right now. So the first account that you need, this might not seem very profound, but you'll get it when I get a chance to talk about it. So a high yield checking account. Now, why a high yield checking? Like, why is this a big deal? Because many times, I'm sure you can relate to this, you open your account, you've got your checking account, and then you just kind of forget about it. Like, you kind of forget like what it's paying, like what the interest rate is, and all of a sudden, like, you've got a decent amount of money sitting in your checking account that's making you 0.000 nothing. And when you think about wealthy people, you know, they have access to private banking or wealth management services that typically are going to pay more than you would find at your bank. But that doesn't mean that you can't get access to higher yields, that you can't make more money. And just to prove a point, I'm going to take you to Investopedia right here. So check this out. Investopedia has their high interest checking accounts that they have vetted all across the country. And you've got this Consumers Credit Union paying you 5%, Presidential Bank paying you 4.375%. And then you see a whole slew of others that all are paying, you know, here's a 3% or more. So if your bank is currently paying you, once again, next to nothing, start asking yourself, like, how much do you truly love your bank? Especially when you could be making higher yield elsewhere. The goal here, the whole point of doing this is that you want to make sure that your money is making money for you. Like, you want the bank, I mean, if you like your bank, you want them to make a little bit of money, you know, like, they're nice. They give you checks and give you ATM cards and nice online access, but there's no reason paying more and having them use your money to make more when you could be making more elsewhere. So that is number 1, is a high yield checking account. Going with that theme of high yield, we've got a high yield savings account. And with the high yield savings, high yield checking, you know, we want to take advantage. We want to get, you know, once again, making sure that we have our money making for us. And this would to include our emergency fund. This is where we keep all our money that we want liquid. You know, what we're talking about here is what we need: liquid cash. You know, if we need access to that money, we want it, like, we need it, especially for when we think about emergencies. But once again, we want to make sure that our money is our money is making us money. And just to show you just a few different examples, there are so many different, it's nice to finally see that interest rates have increased. I know inflation has increased with it. Even more reason why you want to take advantage of what is out there. So this is on bankrate.com, just showing you some of the different high yield savings accounts that exist. We've got 4.3% at PNC Bank, 4.5% at Citizens Bank, 4.75% at CIT Bank. There are several options out there that are paying more than 4%. So if your bank, once again, isn't paying you a lot, find that account, find that bank. It's going to give you high yield, both on the checking and also on the savings side. So that is the second account that you need. The third account that you need, and for me, this was one that I didn't have initially. I mean, I barely even had a savings account when I first started, if I'm being honest. So the third account that you need is a tax savings account. Now, if you're a business owner, because I am assuming here that you're going to end up becoming some sort of business owner, or maybe you are a 1099 independent contractor, self-employed. So you are making money. You're in charge of your schedule. You are in charge of your domain. You are in charge of your revenue, how much work you're doing, which also means that you are also in charge of when you pay. You're in charge of paying your taxes on a quarterly basis. This is something, when I first started in the business as a financial planner, I was an employee of a brokerage firm. And I was kind of an entrepreneur, but I was still an employee, right? I was still in charge of the clients I brought in, how much I made. I had to give them a cut. But when I finally co-founded my own investment firm, I became that 1099 employee. And that's when I learned like, oh, I have to start paying quarterly taxes. Also good, if you're going to have a tax savings account, it's also very important to have a good CPA that's going to help you with this process of help you determine what your quarterly payments are. But you want to start funneling money in every single month so that you have a tax savings built up. Because what happens at the end of the year, if you haven't paid, like you think, oh my gosh, I'm making so much more money as an independent contractor. And then at year end, when you get your tax bill and you're like, oh crap, I forgot, I still have to pay taxes. Now you got to scramble to pay the tax, because yeah, you can file an extension, but you got to get the money somewhere, right? Uncle Sam, the IRS is coming for their money. But having that tax savings account so that it's not commingled with your high yield checking, your high yield savings. You can make sure that this tax savings is a high yield account. So you can open up a second or a separate or even a third account, but basically a separate tax savings account that is also high yield, so that it's earning interest while sitting there before you have to make that tax payment. So that is account number 3. The fourth account, this is probably, I don't know if it's my most favorite, but I think it is one when I finally allowed myself to recognize that my best investment is starting what I call a personal equity fund. So what is personal equity? Well, once again, you are your best investment. So investing into yourself is going to give you the largest ROI than any investment that I'll ever talk about here on this channel. So how do you invest in yourself? Well, there are so many different ways. I've got a lot of different videos where I talk about this, but you can invest in yourself. I mean, it could be therapy. Therapy is good. Could be a coach, could be a mentor, could be a paid mastermind group, books, conferences, tons of different ways that you can invest in yourself. So the whole point, the whole strategy of opening this personal equity fund is that for me, when I started to really see this was I saw talk to a lot of people that when they thought about attending a conference or hiring a coach, they viewed it as an expense, as a cost. And almost like it was like the same category as if they were making a payment on a credit card. And I really wanted to challenge people's views on how they saw this, because once again, you are worth the investment. So if you, instead of keeping this money in your high yield savings, your tax savings, your high yield checking, you open up a separate account where you start funneling some money in. And instead of using it for emergencies, we're using this money to invest into yourself. So that could be investing into conferences. That could be investing into some sort of coaching program, hiring a coach, hiring a mentor. It basically allows you that freedom to take money that you have intentionally parked in this personal equity fund, to use that to invest into yourself, to improve your experience, to improve your current way of life, like whatever that is for you. And that's why I just love having this separate personal equity fund that you get to use that money to invest into yourself, to making you a better person, to help you make more because you're more qualified, more skilled, high income skills, whatever that is for you. And for me, that was investing, as I've already said, investing into different conferences, into coaching programs, into mastermind groups. These are the ways I've been able to invest in myself, where I've seen that exponential ROI that I'm not going to see in any traditional type investment. So that is account number 4, is the personal equity fund. Number 5, I mean, you knew this was coming because I talk about a lot on the channel, but that is a Roth IRA. A Roth IRA. Love the Roth IRA. We're talking about tax-free money, which is huge, tax-free. Now, for some of you high achievers, high income earners, you already know this. Like at some point, you cannot contribute to a Roth IRA. So what that looks like here, if you are single, and this is for 2023, if you are currently making over $153,000, you cannot contribute to a Roth. If you are married filing joint, that the number is $228,000. So this basically means if you are making more money than these two numbers, you can't partake in the Roth IRA tax-free party. So sad, right? So sad. It's horrible. Obviously, you're making good money, but that's okay. Well, that doesn't mean you still can't contribute to the Roth IRA. So that's when you can take advantage of what is called the backdoor Roth IRA, which basically means that you get to open up, it's basically a traditional IRA, although it's referred to as a non-deductible IRA, which basically means that you're opening a traditional IRA. You make too much money to get the tax deduction. So there is no tax deduction. So you put that into the traditional, and then you immediately convert that to a Roth IRA. There are tax consequences for doing this, so be sure to consult a tax professional before you embark on any of these suggestions I'm talking about. But either way, it still allows you to get a Roth. Now, if you are not in the situation where you are making too much money to put into the Roth, great. That means even better. Like, you don't have to worry about that. Just open the Roth IRA, start investing, take advantage of that compounding interest, and then you've got a nice tax-free nest egg waiting for you at retirement. So that is account number 5. Number 6 is a self-managed 401k. Now, you're probably familiar with the traditional 401k plan. So with the traditional 401k in 2023, you're allowed to put in up to $22,500. So that's money coming out of your paycheck. However you structure that is coming out every single month, every single paycheck. So the most that you can put in yourself is $22,500. Then if your employer also has a match, whether it's a dollar for dollar match up to a certain percentage, whatever that is, then that you can then put in more than that. The most that you can put in between your contribution and a match is $66,000. That might seem like a lot of money, and it is, but that's where being a business owner and then having the self-managed 401k, which basically is a self-directed 401k, you can put in a whole lot more. So as that example, going back to the IRS website here, you can put in $66,000 total, which is 25% of your total contribution. So the way that I have my business structured is I'm obviously an employee, and then I also have my wife is also an employee. So what that means is that we can put in the $22,500 each for both of us, and I can then take 25% of the total compensation, and I have our salary structured where we could take 25% of our salaries, add that. That means in total, I'm going to add this up real quick because I'm, on YouTube here, and probably should have already done this, but that's okay. So basically, between the two of us, we could put in up to $132,000 into our 401ks. What makes it even sweeter is that it's a self-directed 401k. So that means I have full discretion on how that money is invested. I don't have to do a target date fund. I don't have to do some crappy mutual fund. I can if I want, but I have the discretion to choose. Do I want individual stocks? Do I want to invest into real estate? Do I want to become an angel investor? Like, these are the different types of opportunities that are open to me. Like, to do so, you have to find a custodian that's willing to host or hold, or custody these types of assets. So you can't like open this at a Vanguard or a Fidelity and try to do what I'm talking about, but there are plenty of custodians that will. But that is account number 7, is a self-managed, self-directed 401k. All right, so we're on to the very last account that you need, and I'm going to refer to this as a brokerage or investment account. And this is probably the one that you could start today I mean, you could do all these high yield savings, high yield checking, tax savings, personal equity, Roth. Number 6 is the one that takes time before you actually can open that one. But a brokerage account or investment account, what I like about this one is one of the things that I have learned, literally have learned by learning, is that how you learn to invest, how you learn to buy stocks or trade options or buy crypto is by experimenting. Is taking a small amount of money. That is key. Taking a small amount of money and testing different investment strategies. That's why I used to do, I think it was called the Grow Your Dough Throwdown, where I would open different investment accounts, different types of investment accounts, whether that was at your traditional online brokers or a Fundrise account, or back in the day, Lending Club when it was peer-to-peer lending. And I would open up these different accounts and just test these different investment strategies. It was fun. Like, I loved it, but also too, like, that's how I cut my teeth trying to learn these different investment strategies. But the key there was using, once again, a small amount so that I wasn't investing a ton of money with the risk of losing it. So I like opening these different investment / brokerage accounts as a way not only to diversify, but also to teach yourself new ways to invest. And you could still seek mentorship for somebody that knows what they're doing. Maybe you can pay them. Maybe they're a nice person. They want to show you how to do it. But the key is, I'm going to say it again because it's worth repeating, start with a small amount so that you learn the basics, you learn the mistakes, you learn a lot of the things that you don't want to learn when you're investing a large block of money. Like, that would not be fun. I've done that myself a few times, so hear it from me. But that is the last account, the last of these 7 different wealthy accounts that you need if you want to become wealthy, to grow rich. So question to you, how many of these accounts do you have? How many accounts, or what is the next account that is on your list that you need to open in order for you to become wealthy, to get rich, and all that fun stuff? All right, y'all, hope you enjoyed this video. Until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.